Hey, what's up, YouTube? We have a pretty major event going on. I don't want to overstate things, but we got to talk about this GameStop, Wallstreetbets, Robinhood situation going on here. So I'm going to go over all the events, how they've played out, and how the media has responded. And I'm going to give you my thoughts along the way. Towards the end of the video, I'm going to tell you where I think it's going to go and what you can do as an investor. Alright guys, so if you don't know about Wallstreetbets, it's a subreddit for people interested in the stock market. I admit it's kind of a degenerate place where people do pretty crazy things called YOLOs, where they put their entire account or their entire net worth on one kind of stock option bet and see what happens. They do have some of the best memes around, so I definitely recommend going there to check that out. But I will say this. There are a lot of smart people on Wallstreetbets. In addition to the degenerates you're going to see, there are definitely some smart people here. One of the stocks that Wallstreetbets has been obsessed with for the past year has been GameStop. Now GameStop, as you guys know, is a retailer. They sell video games, and really they've been struggling like a lot of retailers. Their stock price has reflected that. You see it's been on the downward spiral for years now. Well, starting at about a year ago, a lot of the users in Wallstreetbets started buying up shares. They're kind of targeting GameStop because of this incredible short interest. Look at that, short interest of about 132%. Now, the way short interest works is when you short a stock, you borrow shares, you sell them, and you're going to give back those shares later. So essentially, you are betting that the stock will go down in value. Now, unlike buying a stock, shorting a stock comes with even more incredible risk. You have unlimited downside risk, right? When you invest in a company and they go bankrupt, you can't lose more than you put in. But with shorting, you can lose everything, right? So how can short interest be over 100%? I'm still trying to figure that one out. But what it means is over 100% of the entire shares of this company have been borrowed and sold short. Now, that's all good and well as long as GameStop keeps struggling, but what happens if people get together and start buying the GameStop shares up, putting the price up? That's exactly what happened very recently. An incredible upswing in the price here from about, $3 or $4 a share all the way up to $3.25 right now. That puts a lot of pressure on those short sellers, and if they don't have sufficient capital to cover the margin requirements, they're going to get margined out. They're going to have to close their short positions. Well, that's exactly what happened. As more and more people bought their shares of GameStop, sending the share price to the stratosphere, we saw some short sellers be forced to liquidate their positions, and they basically got margined out. Now, who were these short sellers? Institutions, hedge funds. So for once, it looked like the little guy, the retail investor, was winning at the expense of the hedge funds. But we can't have that. What happened next is pretty hard to believe for those of us that believe the United States is a fair world, a fair market, and things usually work the way they should. It's pretty easy to believe for those among us who are more cynical. First, the Wallstreetbets forum got banned suddenly for some hate speech. Now, I think we're all against hateful speech, but the timing of it is quite interesting. Next thing that happened is that Robinhood app, a very popular app used to trade stocks among retail investors and very popular on Wallstreetbets users, may I mention, they decided to halt trading of GameStop and a few other stocks that were heavily shorted. Of course, during that time, the hedge funds themselves could, quote, recalibrate their positions, end quote. Next, the media came in and showed you whose side they're really on. This guy here, he's a hedge fund billionaire, Chamath. He came in and debated someone on CNBC and really, in my opinion, made them look like a fool as CNBC rose to the defense of hedge funds. Now, the video has since been removed, but you can still find it on dig.com. I'm going to leave a link in the description below. It's a very telling interview as the host at CNBC continually tries to defend the hedge funds and make these retail investors out to be the bad guys. Finally, Robinhood has since decided to restrict trading on certain securities like GameStop and other securities that are being targeted by the Reddit users on Wallstreetbets, such as AMC, Bed Bath & Beyond, and Nokia. In addition, I saw that Robinhood added a slew of other companies to the list like Starbucks. In my opinion, this is just to throw off the scent. In other words, to make it not look as if they're doing this specifically because of Wallstreetbets or specifically in order to protect these hedge funds. Finally, you've got some prominent politicians also jumping into the defense of these hedge funds, ordering the SEC to please investigate Reddit, investigate social media, make sure that these retail investors can't get together and discuss investing ideas again. And here's an article from Yahoo Finance trying to really paint this all as a conspiracy theory and trying to show that, Robinhood is in the right. There is nothing shady about what they're doing. In my opinion, there's really no merit to that claim, and I think that's going to bear itself out over time in this class action lawsuit that Robinhood has recently been hit with. Because when you think about it, when you freeze trading for a period of time, those missed out gains that you could have realized as a trader, those can never come back to you. They're gone. They're gone forever. When trading resumed, the price of GameStop was lower, and anybody who wanted to sell their shares at that higher price before trading was frozen can never do that again. Here's a poll from October of 2020 that shows in the United States, we have a record low trust in the U.S. media. Americans trust their media on average a little bit more or less than used car salesmen or lawyers. Now, this survey result is very partisan. Mostly people on the more conservative side of politics have greater distrust in the media. But this event with GameStop, I believe, is bipartisan. I've talked with people on both sides, and I really feel like this is going to be one of the major events that gets everyone to clearly see that the media has loyalties, and those loyalties are not reporting the facts to you unbiasedly. So I really view this event as actually a pretty big moment in our history. At this point in time, you're going to see a lot of people waking up and kind of realizing that, okay, the media isn't telling me the truth. Or if they do tell me the events of the day, they're painting it in a very biased picture. They have financial relationships with these hedge funds. What else are they lying to me about? So I think we're going to see really a gigantic loss of faith. A loss of faith in the whole system. Similar to what happened roughly 20 years ago when we had the Enron, the WorldCom scandals, where they had cooked their books, and everyone kind of lost faith in the whole financial reporting thing. You had a lot of investors doing analyses on companies, and when all these scandals started to hit, and they say, oops, we're restating our earnings, our earnings weren't as high as we thought, okay, we were actually losing money, everyone kind of lost faith in all the accounting numbers being presented, and you saw a lot of people just sell out, and we had that market crash. Really part of the dot-com bubble there. Well, what could happen going forward from today? A similar kind of thing. Kind of a loss of faith in the entire system. When the little guys actually win one, someone might step in and say, uh-oh, you don't get to win. We're changing the rules. That would be devastating to market confidence. Now, is that going to happen? I can't really say, actually. Even though Elizabeth Warren came out and defended hedge funds, I'm also seeing other politicians come out the other way because there is a lot of public outrage over this, and it is bipartisan. So I don't know which way it's going to go down, but I know one thing. I know Wall Street is going to fight for it because for Wall Street, if they lose this one, it's kind of a tipping point. That means that they're going to, in the future, they're going to allow this kind of thing to happen again and again. If they shut this down, if they say, nope, this is not allowed, then that kind of protects the sort of monopoly that they have going on for themselves. So it's a very big moment. I don't know which way we're going to go. Congress, you got people arguing both sides, pressuring the SEC on the one hand to investigate Reddit, on the other hand to investigate Robinhood here. But one thing I'm pretty sure about is that Bitcoin will go up in value. That's kind of a random prediction. It may seem random, but really, if you think about it, it's not. You see, Bitcoin is kind of a middle finger at the whole system. When you think about the federal government, they choose when and how much money to print. They can arbitrarily change the value of a dollar by doing so. They control inflation that way. Other countries are also printing money. So a lot of investors, because of all this money printing, have really started to buy into Bitcoin. We saw this last November and December when the value of Bitcoin really shot up. And during that time, the increase in Bitcoin was coming from an increased demand from North America. So I really think that shows you that people here are losing a little faith in the whole currency, really. You see, Bitcoin's a wonderful thing. You have a Bitcoin wallet, you can hop on an airplane, you can fly overseas to another country, you got your Bitcoin with you. It's virtual. The government can't go and print more Bitcoin and screw up the value of your Bitcoin. The other thing that I can see happening in the short term, and I mean next week, this coming week, we could really see a significant dip in the market. The reason for that is many young retail investors use Robinhood, and because of what Robinhood's done here, it's kind of restrict your trading there. Why would you want to use a broker like that, for one? And number two, it's really kind of personally insulting. So I think a lot of investors using Robinhood are about to get out. They're going to dump their shares from Robinhood, cash it out, and at some point put it into another brokerage. But in the meantime, between time, I could definitely see the market go down as all those investors pull their money out. If you're enjoying the content so far, please consider hitting that subscribe button so you can check out more videos from me. Thank you. Alright guys, so those are my thoughts on GameStop, Robinhood, Wallstreetbets, and that whole situation. I hope you guys enjoy my perspective. Let me know what you think about the whole thing in the comments below, and definitely hit that like button. Thank you for watching.